Sabina, let's start with you.
Hi, everyone. I'm very happy to be here. My name's Sabina Kalyan, and I run the Global Real Assets Research effort at CBRE Global Investors. What has changed in 2020? What hasn't changed is probably the hot demand for industrial, which across the region, when we do our relative value analysis, still looks a good investment and where we're still very active. And there's also been a fair amount of, resi investment in the region, which has continued, and that's been very promising to see the establishment of a more institutionalized investment sector there. But obviously retail globally has been hit. CEE is no exception to that. So we've seen obviously restrictions on, what types of retail can be open, sales volumes, yields moving out, rental declines, rent payments declining. So that's been problematic. And offices is really interesting as well, because if you look at our sort of quantitatively based office analysis, on a relative value, some of the big capital city markets do look fair value, if not a screaming buy, but we are starting to see the vacancy tick up in a number of those major markets. So that hasn't been as immediate a change as retail. But obviously there's this huge debate about the future of office, and CEE is going to be no exception to that. So a little bit more nervousness about the headline signals there. Thank you.
Great, thanks. Richard, so why don't we start with you, Dan? Just give us a picture in terms of international capital. Just give us a brief introduction of yourself and Cain, but also what are you seeing for international capital?
I'm Daniel Harris. I work for Cain International. I run the European Investment Programme, and we invest across Europe, the UK, whether that is Europe, isn't Europe, who knows at the moment, and also across the US. We're a big believer in major capital cities, gateway cities, whatever you want to call them. And we feel that way, and that's the way we generally invest across Europe and across the US. And we are big believers in these cities for all the reasons that people have talked about for many, many years. People want to be together in these great big city agglomerations. And, there's no question COVID has questioned some of those ideas. Do people want to live out in the countryside all alone in a farm, or do they actually want to be back in the cities? Our view is very firmly that, people want to live in cities. I don't believe what we're doing here is the way that people want to live their lives, I'm afraid. And I'm a very, very firm believer in that, and so is Cain International. And this is not real life. This is a temporary position that we're in. And I think what you see is people are massively returning to offices, and people will return to the cities. And I think international capital, I think what you learned from the last financial crisis was that capital cities and those major gateway cities performed extremely well coming out of a crisis. And I think they will continue to perform extremely well coming out of this crisis. And people can argue about work from home. People can argue about what it means for the long term. I think long term it means flexibility, but I don't think it means any major changes to offices. But I agree with what Sabina said before, is that residential logistics are probably going to be the big winners in the short term. But I think if you have a long-term view that we don't want to live in this situation, or talking on a conference on Zoom, I think that those major cities with the big denominator, the big amounts of offices and big amounts of residential, will be the big winners coming out of this, and probably even more so. Okay, good.
And Petra, just in terms of the, I suppose, putting this into a more pan-European global context, how do you see the CEE region at the moment, particularly looking at the locations, the cities, the countries?
I mean, from our perspective, we have a relatively small portfolio in continent and CEE, close to 400 million at the moment. My role is to run the research and strategy for LaSalle. So we do look at the markets very closely across the whole Europe, obviously. And I see that it doesn't matter where you are at the moment. The short-term challenges, how cities and countries will come out of this crisis, are quite large. And there we will see some differences between winners and losers going forward, depending on how well fiscally they are positioned, how strong they are in terms of productivity, employment, and all the things that would drive the economic growth. But ultimately, there are no no differences where we would see lesser risk at the moment around Europe or even globally. All the countries are in the having same issues, same problems.
You know, there is a feeling often, people who live in Poland see thriving cities across the whole country. But internationally, some investors view Warsaw, maybe Krakow, one or two other regional cities as the major cities. You are you're going big time into Gdansk and Katowice, for example. What gives you that confidence?
Happy to be one of the panelists. Thank you, Richard, for inviting me. I'm board member of Capital Park, responsible for investment and finance areas. Just a quick introduction. Yes, Richard, we are big fans of the regions. Although, you know, currently our portfolio is mainly in Warsaw, the new pipeline is more focused on the regions. And one of the biggest investments we plan, it's a long-term project, is in Katowice. We believe this is a very, very dynamic region, and as opposed to other regions like Krakow or of course Warsaw is a strong region, but and Mazowiecki, but Krakow has become a center of accounting for the world. Business service centers has established their accounting centers, and you could see that a lot of accountants, there's not enough accountants in Krakow, and the shift towards the other regions is very important. So Katowice is very dynamically is next obvious choice. It's very close to Krakow. It's the next obvious choice. There's still a lot of workforce available, and it's a well-established R&D base. So we decided also, it's very dynamically growing. It's a GDP, one of the fastest GDP growths in Poland. The same with Tri-City, but Katowice, we bought into the project where we have 25 hectares. It's basically the creation of the new district, multifunctional district with about 60% residential, 11% of offices, then cultural functions, educational functions. Really, truly multifunctional project over the long term, and we're doing this in a cooperation with local investors. And the project manager, the key person in the project is the former mayor of Katowice, and so we do it in a cooperation with the local people. Taking advantage of the local dynamics. Tri-City, we're also big believers in Gdańsk. We just bought a top of the peninsula where Motława joins with Martwa Vistula. So it's surrounded by sea. It's just a sea entry to Gdańsk. It's a hectare and 1.3 hectare plot zoned for residential. You will be zoned for residential. It's just a master plan that city is working on, and as the same, as the colleagues before, I'm strongly believe in residential, that this is the big winner of the COVID crisis. So residential, logistics, these are the sectors that will be the winners. We've been focusing so far on offices and retail. We still believe in offices, although in terms of offices from our portfolio, we see that there's a big return to the suburban office and proximity to the districts where people live and can walk to the office. This is very important, and this kind of offices are going to rebound much quicker than the central, let's say, towers, which are less safe in a pandemic environment.
Okay, well, thank you very much, Marcin. That's a short overview there, and we'll come back to this, to regional cities. Noah, Wing bought into or invested in Eco Investment, of course, a major developer on the ground here in Poland, just in a nutshell, what are the major changes from your perspective over the last year? And also, Eco Investment invests outside Warsaw, in Katowice as well, in Łódź, other cities. What gives you the confidence to go outside, especially at this sort of time, outside Warsaw?
Hi, good morning, everybody, first of all, and thank you. I'm Noah Steinberg. I am the chairman and CEO of Wing, and also the chairman of the supervisory board of ECHO. Wing is a Hungarian-based property company, a developer and an investor present in all asset classes. And as you're probably more familiar, ECHO is an office, primarily office and residential developer with retail activities as well, present across Poland and a leading developer in Poland. We've owned ECHO now for about 13 months. So one big thing that's changed over the last year is that we own a large stake in a terrific Polish company. I think one of the things that's happened in this crisis is that trends that were already present have accelerated. So, right, the home office trend is not new. We were already building fewer workstations in our office buildings than there are employees in those companies, because people were already cycling through and functioning differently. Obviously, e-commerce is not new. We were already ordering things online, and those things were coming primarily from logistics and warehouse facilities. It's just that trend, again, has been accelerated. So I think as we look at what's going on now, I don't think what we see is obviously there are short-term changes. And I think what's important also to stress is, as difficult as the health situation is, and as tragic it is for the people who are directly touched by it, on the other side, we're not in a massive health crisis. What we're in is a crisis which is caused by the measures taken to prevent a massive health crisis, right? So I think in that regard, you can look and say within the foreseeable future, whether it's 6 months or 9 months or 3 months, that there will be there will be an answer to the health crisis, and we expect that. At which point there will be a new normal, because we won't go back to exactly where we were, but rather what we'll go back to or go into is a world where those measures can be relaxed, but at the same time, some things will have changed. And I think that's when we look to the future, what types of buildings do we focus on? Where do we want to be? Then that's the kind of thing that I think we really take into account. In terms of the specifics of the Polish market, one of the key reasons that we chose to enter Poland is because of the diversity of the markets. So Hungary is much more really a market that's centered on the capital city in every way. And in Poland, in addition to Warsaw, we obviously were present in 7 markets primarily, and we were a strong believer in the regional cities in Poland. And the markets in those cities bear that out. And they bear it out because primarily the types of functions that are there require modern building infrastructure. So I think at the end of the day, we build primarily for our tenants. And if our tenants find buildings that meet the needs, the end users of those buildings that meet the needs of their requirements, they will rent. If those are tenants that have good covenants, they'll rent on a long-term basis, and that provides an attractive investment product. And I think international investors are comfortable with the regional cities in Poland, prepared to buy buildings in those regional cities. They're comfortable with the legal system, they're comfortable with the finance, and they're comfortable, and this is key, with the quality of the buildings in those regional markets. So if you go to Krakow or Katowice or Wrocław, you don't go into a building that looks like it's in the sticks somewhere. You go into a modern A-class building which meets the needs of international tenants and international investors, and that's what we see.
Thank you, Noah. I mean, I think that's, it's for anyone on the ground here or knows the region well, that's obvious. But it's amazing when you talk to international investors further afield that sometimes they still feel only comfortable in Warsaw. Hannes, you're coming from a lender's perspective.
Yes.
Thank you. Could you just give us a snapshot of what you're thinking at the moment? What has changed? Which locations? It's a big question, of course, but what's on your mind? How are you viewing things at the moment?
Yes, I'm representing Erste Group, who is heading the Austrian savings bank sector. We have a rather extensive footprint in the region, as we are a retail bank as well. So we have a workforce of close to 70,000 people in the region. I'll do the commercial real estate syndication desk here in Vienna. So we provide on average a loan volume to the region of 2.5 billion euros a year. Covering Poland, we are currently on a loan book of around about 1 billion euros. And as my previous panelists also said, for us, on one hand, Poland is clearly the biggest market in the region, covering 3 times the other markets. And also there is the regional diversification. So what we are looking into is still the hot topic at the moment, logistics all over the place, and also office, and to a certain extent also retail. So this hasn't changed. What has changed is that during the first wave and the second wave, there were an upswing on funding costs, which has now calmed down a little bit. But still prices are not close to the pre-COVID level. And overall, the structures got a little bit more conservative. So the overall leverage dropped maybe by like 5 percent points, but nothing major. So we do support our clients in the region, which are mostly institutionals or bigger pan-European clients there. And from what I can see, there hasn't been much of a stop in the pipeline this year at all.
The vaccination news is gathering pace. This is changing, seems to be changing the mood, but of course we have to see what happens. But from a lender's perspective, do you view offices differently, or do you see what's happened in the last few months as just a blip in the kind of general perspective of the market?
Everybody's focusing now on retail as the impact is directly seen in the figures and in the collection rates. On the office side of things, we see that the investment part is still going on, so not much changes there. This is mostly covered by long-term rental contracts with international tenants, so there is a stable position. What we also see that everybody is now, to a certain extent, reconsidering their developments. So obviously there is now the need or the way to what can we learn from this crisis and how will an office of the future look like, which we will then see in the pipeline like in the months to come. So these are, on one hand, floor plans that have to be changed, functions of buildings that have to be changed, entry systems and pathways within the building that has to be changed, even on HVAC systems where you now can clearly monitor how many people are in a room, if there is something in the air, how can you take measures to close up certain parts of buildings. So this is something that I'm very looking forward in the next couple of months to see the solutions from the developers to these new challenges brought in through COVID.
I think that's going to be a really interesting area, Hannes, particularly. We've got a focus later on in the week on PropTech, actually, and I know that's going to be one of the key topics there about how do some of those things get solved. Sabina, I just wanted to come to you, looking at the locations and maybe a little bit at the capital flows as well. How are you seeing particularly the CEE region, I suppose in a global context in terms of capital and interest, and also within a tighter European context, I suppose?
Yeah, I mean, I'm not sure this is much to do with COVID either, but evidently when we get into a risk-off world, which we really were sort of February through maybe last month, maybe till September, that does limit international capital flows. Like I think that the European capital, the institutional capital is very familiar with CE and has more confidence, but if you're talking to sort of American capital or Asian capital, it's harder to get them into smaller markets where in a time when liquidity generally is lower. So that's no surprise. It'll be interesting to see how soon that bounces back, though, with the rush of positive vaccine news. But what has been interesting as a sort of countervailing force to that is the flavour of the month has been industrial with bells on, and like some of the most mature investable parts of that European industrial, the big bananas, whatever you want to call them, is kind of coming through Poland and Czech Republic and into Hungary, right? So there has been a slight countervailing force there, which has been really interesting to observe. But it has become more challenging as someone who works for a firm which is often marshalling capital from out of region into it to get that interest up, because just markets are smaller and less liquid, with the exception maybe of Warsaw.
Okay, good. And Daniel, obviously you've been familiar with CE markets for a while. a long period of time. What's your sense? What's I suppose the house view at the moment on CE markets? Which markets in terms of locations particularly would you be looking at? Are there some which you wouldn't? What's your capital telling you?
We're very focused on Warsaw, and we have an investment in Krakow. We're developing a big business park down there with White Star. We have an office we have a residential development in Budapest. But in general terms, I think international capital is generally focused on the bigger cities and is leaning towards offices. Logistics has performed extremely well in Central Europe. I think it's quite interesting when you look at the logistics markets. There has been yields are as low or pretty much as low as they are in Western Europe, and I think Poland is always going to be the major focus. Right, there's just no question. That's got the strongest economy, the biggest market. It's always going to be people's focus. But and I think international capital. What you see in a crisis is that there's always whatever people are calling a flight to quality. People jump back to what they know, right? People start to look a bit more inwardly rather than outwardly. And so international capital generally leans towards, you're seeing Germany, for example, yields are lower than ever in Germany. Why? Because it's a safe haven, people's capital. They think, if I've got to invest, which people do have to invest over a troubled period, it's better to put my capital somewhere I feel is safe, And so that's why you're seeing record low yields in Germany across offices and across logistics. And I think I think Central Europe, what's interesting about Central Europe is it's continued with investment over the last few months. It hasn't dried up. It hasn't gone down to zero. And I think that stands the region in a very good favour, to be honest, because I think if there had been a complete flight to quality, and I think that shows the difference between this crisis and the last crisis 12 years ago, was that, you look at countries like Romania as an example, people didn't invest there for 4 years after the global financial crisis. Now, obviously, I'm not as particularly familiar as what's going on with Romania today, but if I look at Poland, people have continued to invest. People have continued, and you're seeing that mostly in the logistics sector. And so I think it stands the region, particularly Poland, in a very good position moving out of this, where I think there will be a strong recovery next year and moving forward from that. So I think overall, I think international capital is positive towards the region. I think sitting back a little bit, but I think is ready to come back in, and you've seen that over the way they've invested over the last few months.
Okay, good. We'll pick that up as well. I mean, interesting. We've got sessions coming up on logistics as well, so we'll pick that point up particularly. Petra, I know from the research side as well and from the fund side, you're looking at investing in winning cities and looking at those areas around that, winning locations, winning cities. I suppose, how do you see the CEE cities in that light, and how do they compare also particularly to the other ones that you're looking at in Western Europe for that fund?
We have to differentiate between short-term issues and long-term, right? Because I think really in the short term, the challenges will be quite substantial still for, as I said, regardless where you are. From long-term perspective, when we look at our winning cities or some of the indices we run on the demand side, Central and Eastern Europe is coming up very strongly. Obviously, the capital cities, whether it's Warsaw, Prague, Budapest, but also Bratislava, which is coming up very high in our rankings as a strong prospect city in terms of the future growth. I would also possibly point out that some of the regional Polish cities have a very strong potential in what we would call nearshoring, or that bringing a bit more manufacturing back to Europe with what the COVID is causing globally to the global trade. So from that long-term perspective, I really see that Central and Eastern Europe has a very strong potential. There is a but, however, and I think we haven't really addressed it yet, which is the supply side of the real estate story, right? And that, even from our perspective at LaSalle, it's one of the key challenges that Central and Eastern Europe has, which is in many cases the market gets very easily oversupplied, which means that you cannot generate rental growth. When you have a challenging situation like we live at the moment, the rents can actually start to even decline. So, and that's a situation that as an investor we don't like to see, obviously. So I think there is from our perspective, we like the region, but we are very, very selective in terms of and looking at the sub-markets, micro-markets, and very strongly driven locations, because we see that supply and the increasing vacancies in the region can cause some trouble.
Okay, good. Noah, I just wanted to pick up with you. I suppose, how do you see this in terms of some of those other markets? Daniel there mentioned Romania, Petra just mentioned Bratislava. What's your sense on that, I suppose, from your perspective, looking at the type of capital that you're running and the sort of opportunities that you're looking at? Are you expecting to move into these markets, or you're already active there? What's your sense of those markets?
Well, I would come back a little bit to the introductory CES presentation, where it was discussed a little bit about how, from a geopolitical point of view, for a long time there was a great deal of homogeneity or unity within CE. You talked about one region, and at least from a geopolitical perspective, NATO, EU, so on, there was just general consensus that everybody was more or less part of a big bloc. I think from a market point of view, that really changed after or during the global financial crisis. And now there is a lot of differentiation on a lot of different levels. And I think that the most mature markets, Poland, obviously, first and foremost, the Czech Republic, Slovakia, and Hungary, have differentiated a little bit from a market perspective also from the other markets. But that said, and I think it's a key question, when we look at our analysis, we previously and currently, and obviously we're not, a big international group with tons of economists sitting and crunching numbers all day. But what we saw from pretty much everything we took into account is that whatever happens, this region will be 100, 150, 200 basis points better than Western Europe. So if growth in Germany is 3%, it'll be 4 to 5 here. If growth in Germany is 1%, it'll be 2.5 to 3 here. But we'll still keep that let's say advantage, while on the other side, there is still, from an investor's point of view, a discount on the value of similar tenants in these markets to the value of the same building if it were in Munich or frankly in Vienna. And so taking all of that into account, the question arises, and I was thinking about this when Daniel was speaking, why is it that we are still considered emerging Europe as a less safe, less secure investment destination? Is that still really justified? Whatever the rationale behind it, it's still the case, and that provides, I think, tremendous opportunities for those of us who are present in the region. So I think that would be kind of my first comment. My second comment would be to say that there are indeed shifts that are happening, not only in the way we use offices or how we view logistics, but also, and Petra mentioned this, in the types of functions that maybe people want to bring closer to home. So I think it's been clear that when everybody moves to home office, if you're in Bangalore, you have different challenges perhaps than if you're in Krakow or wherever. And so I think that there will be winners in terms of the kind of fight for tenants or for functions, and Central Europe is well positioned to take advantage of that. And then to answer your specific question, the markets within CEE that are considered less developed, Romania, Bulgaria, Slovakia is a kind of a different story because it's smaller than the other surrounding countries, but also not less developed in lots of ways. But those markets which have been less prime investment destinations, I think, provide those of us who are comfortable here in the region with new opportunities. And certainly we as Wing have some investments already, and we're looking to expand our regional footprint in and as much as it makes sense. I'm a big believer, and we at Wing are big believers in having the strongest possible local team on the ground, which usually means a platform investment. So that was behind our investment in Echo, and I think that's the way we would approach other markets. But I think there's still tremendous potential, and we will see across the board a strong, I wouldn't so much say bounce back as a strong progression into the thing that comes next. And we're very optimistic in that regard. And so I think that, with any luck, what we're really looking at is a very positive scenario coming out of the health crisis in all of the CEE markets.
Okay, that's interesting. And Marcin, for you, I suppose, is that going to encourage more of this? I mean, do you see more of this move into the regional cities for the points that Noah is mentioning there, in a way that, there may well be more, like you would get nearshoring, I suppose, in the logistics side. The same is true of potentially more work coming into Europe in terms of, moving out of Indian call centers and maybe nearshoring into CEE.
Definitely, I would agree with that. And that there was a study done for the global BPO and shared service centers, and during the COVID times, actually Poland proved to be the most resilient country and the best performing, and this is because of the infrastructure in place. So people have now and there's a big penetration of fiber optics, and access in internet quality and penetration of internet in Poland is on a relative basis is great, and really it's proved that we can overcome certain barriers. So I mentioned that there's hardly any accountant left in Krakow to be hired, but with the fiber optics and remote work, you can locate your center in Krakow or Katowice or whatever regional city, but have access to the whole region. Basically, people working from homes, not only working from the offices. And the centers really performed really well during the COVID crisis, and there was continuity. And we are, I would say, we are in this sense we are different from the other markets, and this is a big driver for the office market, not only in Warsaw but also in the regions, and especially in the regions. So we already saw some of these movers coming to Gdańsk, coming to Krakow, Katowice, Łódź, Wrocław, Poznań, all these cities, so that's I think big driver for the demand in the office for the office space in future. What I can see is also what you mentioned before, the proximity to where the people live. That's what gained importance. And I think if you were to choose now whether you want to work closer to your home, in the nice office, closer to your home, rather than commuting to the center and working on an office tower where everybody will have to go through crowds in the metro, then in the elevators, etc. You would definitely choose to walk to your work, and this is what we see. We can see this is also in the impact of this phenomenon on the rents and on the demand for offices. So we could see increasing vacancy in the central locations, and especially there is over 100,000 meters now on supply for the subleasing of the office space that was already pre-let in the neighborhood of Rondo Daszyńskiego in these office towers. And if we look at the performance of our, for example, Royal Wilanów, where the Wilanów is actually the most dynamic district in Warsaw in terms of actually a lot of functions, not only residential right now. We actually noticed the growth of occupancy and growth of the rental income. So that only proves the phenomenon. I don't know if it's going to last, forever as a result of the COVID crisis, but it definitely gives people something to think about.
The finance minister talked about REITs. This is everyone who knows the Polish markets, the never-ending long saga where nothing happens really. He said he's open to talk. Maybe I don't know how honest you can be. Are you encouraged, or do you feel it's just more talk? In a nutshell, Marcin, if you can.
It's also good it's always good to talk. I mean, we've fought for this project for many years right now, and so maybe there's a good change in this regard. I don't know. Let's see.
The minister did say that the more noise that was made, the more it would come to the top of his desk. So maybe, Marcin, we all have to make a lot of noise around it. Maybe that's the next part of that.
will be definitely worth it, because if you look at the structure of the investors in Poland, there's only a few percent of the volume that is basically in hands of the Polish investors, volume of transactions, and the stock. If you look at the office stock, it's primarily owned by the international investors.
I think that's an interesting point. Just one thought. Poland came through the global financial crisis better than any of the other surrounding, frankly, better than any country in Europe. The one downside to that is that all of the other countries, as all of the international investors disappeared, saw the emergence of a domestic institutional investor capital class. And I think that happened less in Poland. I think if you look at what's going on in Hungary now or in the Czech Republic, everywhere you saw more emergence of local capital due to necessity, that now is a major player in these markets. And I think you're right, that's still relatively underrepresented in Poland compared to the other countries.
No, I think that's an interesting point, and we'll pick that up also later on this afternoon in a session. Hannes, I just wanted to come to you on the financing side. There's a lot of discussion here. Noah is wanting to extend his footprint. Petra was talking about different areas there that could be attractive. Marcin looking at more regional cities. Is finance going to be an issue for this, do you think? Is that going to be somewhere where the banks are financing that, or is that going to be alternative lenders? How do you see the sort of finance view?
There are a couple of initiatives so to broaden the financing and funding base. Thinking about now in Hungary, the Hungarian National Bank has a very successful corporate bond program running. Markets like Serbia are trying to copy that. So the funding base is getting broader. We see the issuance, especially of logistic companies, to the bond market in the Czech Republic. There were a couple of prominent transactions in the last couple of weeks. But nevertheless, this time, this is not a lending crisis or a financing crisis. So the banks are here to support not only real estate, but the whole economy. And this time, we really are part of the solution and not part of the problem. So I would say, yes, there will be some defaults. And yes, there will be provisions built in the balance sheets of the banks, but over and all, there are lots of opportunities for financing. And if the business case is strong, and we see also now that the players are most of the time institutional investors, they are here to stay, and we are as well.
Looking at tenants, and I'm thinking about the warehouse market. We do have a warehouse session later, but actually everyone on the session is in the warehouse market. You have a broader view. So Daniel, Sabina, Petra, is everything as rosy? I mean, it's clear that it's going great guns in warehouse and logistics, but I was talking to a developer yesterday who uncharacteristically said that some of the tenants are a little bit uncertain, because these are uncertain times. And same in office, I would imagine, hesitant to sign, lease deals of 5-7 years, etc. And the second thing is that this region has been very much counting on construction coming from Asia, or production rather, and that it will come back to this part of the world. Now, I'm wondering when the crisis is over, hopefully quite soon, people look at their Excel sheets, etc. Will that happen? I know this is a big question. You're not, let's say, you're real estate focused, but do you think that could happen? And how do you see the change in tenant thinking at the moment? Sabina, over to you first.
Yeah, there's no reason for the Asian demand not to come back. In fact, if you look at China, the economy has been roaring really for the past quarter and a half, and has almost been waiting for Europe to get over the worst of its COVID crisis before people can travel and do deals again. So I'm relatively optimistic on that point. I think one of the biggest points of debate we're having globally, and applies obviously to the CEE as well, is how far a lot of the demand for warehouse logistics has been brought forward from the future. So are we genuinely on a newly accelerated path ahead of where we already were for that sector? Or have we just brought demand forward because we've had to just rise to meet sort of changing patterns of behavioral consumption during this crisis? So I think there's this potential that people are, I'm not surprised tenants are worried, and we're not necessarily seeing that on our portfolios, but it doesn't surprise me, because there must be a little bit of nervousness that even though they've done actually pretty well and been resilient this year, what actually is going to happen next year? So it's kind of the reverse of office and retail, where they might see the post-vaccine recovery. Do these guys get the reverse of that?
I agree with Sabina actually on all the points that she mentioned. One thing to add is that we like the logistics sector ourselves. We are heavily invested in the sector. We want to do more. But I agree with Richard that we also hear that the concerns in the market. We have to not forget that 40% of the logistics demand at the moment is driven by retailers, and they have been struggling throughout this year for obvious reasons. We may see insolvencies, we may see bankruptcies, we may see lots of issues. So, and that will have to impact on the logistics market as well. So, despite us heavily and actively looking in the sector, we are also very, very cautious, and the covenant is very important to us, and as it always has been.
There is a big difference between a logistics unit leased to Amazon for 10 years and a logistics unit leased to the carpet retailer in the high street who has got no business anymore and is closing down and going insolvency. Just because they rent the same looking box doesn't mean they're the same tenant and they're the same covenant. And I think people are becoming slightly blinded by it's logistics, so it's fantastic. The tenant is an irrelevance. Well, that's just not real estate. That's just following a bubble, right? You know, the tenant is everything. And, you know, I mean, the other thing is that, you know, you can go onto a multitude of these panels across the country, across Europe, and everyone says, what are you investing in at the moment? Well, I really like logistics and I really like residential. Okay, but let's go across the capital markets. Before, there was a big load of money that went into retail. And then there was a huge amount of money, more than anything, that went into offices. And then there was 25% that went into logistics and 10 to 15% that went into residential. If everyone on the panel says, yeah, I'm really focused on logistics and residential at the moment, not really into retail, and I'm a bit turned off by offices, so I know what's going on with the future, that's creating a bubble in those sectors. There's no question. And when you're seeing prime yields of logistics go below the prime levels of offices, and I think when you look at the build cost, the replacement cost, the scarcity of land, I think something's going. I think there will not be just winners in investments in logistics. People are slightly blinded by the science at the moment. That's a term that's used a lot in the UK, and I think need to be a little bit more careful about what they're investing in. There's no question, trends have been improved. Retail's on a downward trend. Online's on an upward trend. No one's going to deny that. But still doesn't mean you can't make mistakes when you invest in logistics. And I think people need to be a little bit more wary about that. And when you've got far more capital chasing fewer deals, because the logistics market just isn't as big as the office market, just isn't. People need to be a little bit careful. So I think there's a little word of caution around the optimism at the moment.
And back to my point, for us as investors, it's about rental growth. And if you don't see that, it's very difficult to justify to stay in the logistics sector, right?
That said,
Yeah,
vacancy in the Budapest logistics market at the moment, and like I said, we always build first and foremost for the tenants, is under 2%, which means that practically speaking, it's full.
Yeah, I agree. That's what's driving the demand. I just think as more and more people build more, and there are logistics in some ways is a bet on retail, right? So you need to be careful. It's about a tenant. As I said, a 10-year lease to Amazon, who's taken up 40% of the logistics market in Europe this year, is not the same as a 3-year lease to Carpetright. They're not the same thing. And I think people are pricing them pretty much the same.
Are there any final comments from any of our panelists?
Just one comment about retail, because everyone is basically, forgetting about retail and punishing retail. And COVID strengthened this trend. But COVID also made clear something that we realized some time ago, that the most sustainable parts of retail sector is convenience retail. And people will always do their shopping. And this is why we also tend to split the so-called retail in our analysis and presentations into different categories. So you have convenience, but you have a lot of food and beverage, gastronomy. You have services. So there's different retail than fashion retail, and etc. So we have to also think in more details. And I think the convenience retail will be a big winner, if you agree.
That's great. Thank you, Marcin. Thanks, Noah, Petra, Daniel, Hannes, and also Sabina. Really interesting discussion there. Thanks very much for joining us, and look forward to seeing you back here again at 11:15. Thanks very much.